Hi everyone, my name is Michael from Lux Trading. On today's episode, we are going to discuss losing streaks, how to mitigate prolonged red days. So let's just get right into the video. Okay, so our first point here is how to relax and take time off after a losing streak. So a big mistake to make when you are in a losing streak is to continue to trade in an attempt to quickly make back the lost money, often referred to as revenge trading. Anxiously pulling triggers on trading opportunities to quickly wipe off the red marks in your trading journal is often key to a prolonged losing streak. Losing money is often emotionally challenging for newer traders, resulting in a negative mindset and in a nervous approach to trading. Continuing to trade with this mindset can easily make them prone to making or even repeating mistakes and exercising poor judgment in making trading calls or even squaring them. A good idea instead is to take some time off from trading to allow the mindset to relax and recover that negative experience. This is especially important to build your long-term trading confidence. Okay, so the second point here is revisit losing trades and write that down for lessons. When you are ready to get back to the game with a fresh mind that is not overindulging in negative emotions resulting from your recent losing streak, the first step you need to take is to revisit your losing trades. Many traders don't want to talk or think about their losing trades as part of a strategy to recover their trading confidence. This can be a big mistake because analyzing losing trades will hone your trading skills just as much as analyzing winning trades. And you could be missing on big learning opportunities by not studying such trades. Essentially, you can learn what trades you should say no to and also learn to avoid impulses that are based on a gut feeling. The goal in this stage is simple. You need to differentiate between genuine losses and misjudged trades. Genuine losses would be trades you qualify as high quality that still returned a loss due to an unexpected market move. Misjudged trades would be the ones you took losses on because of a misjudgment on your part. Either when you're pulling the initial trigger or as you were managing, exciting the trade, it is not uncommon for a losing streak to often compromise of both variations of losing trades. A couple of back-to-back unlucky trades, for example, could easily upset the mindset of a new trader, causing him to swing towards either ultra-aggressive or an ultra-conservative mode, prompting an error on the following trades. Also worthwhile to try and recall your emotional state between the losing trades in the streak to determine key points relating to the mindset and approach to trading. Were you emotionally solid between the losses and still trading each trade setup on its own merit? Or were your latest losses playing on your mind at a key decision moments during the streak? Often a simple impartial analysis of the trades themselves will reveal a lot about your emotional state. If you can classify more of the losses to probability and bad luck, chances are you had a mature approach to your trading and losing streak was likely unavoidable. Okay, so step 3, refine your trading approach. If the analysis of your consecutive losses reveals loopholes in your trading strategy, it may be time to revisit your trading rules and refine them further for improved trading results. Perhaps you are being too conservative in your trade management and not allowing enough room and cushion for volatility in the market. Or on the contrary, maybe your strategy calls for an aggressive action that could be hurting you. You could be using far too many technical indicators that could be yielding frequently mixed trading signals. Or perhaps you are not using enough at all for a clear-cut objective trading signal. Or perhaps you need to refine your trailing loss strategy or your style of booking profits, partial profits booking versus taking full profit. There can be several aspects of a trading strategy that could be hurting your results and landing you in the uncomfortable position of dealing with strings of losses. Always be prepared to be flexible enough within reasonable means to alter and tweak your strategy to make it more effective. Okay, so the next step is manage expectations and emotions. The other extremely common reason why traders often find themselves in a losing streak, besides what we discussed in the above section, is poor emotional stability and the lack of proper management of expectations. If you find that the losses you've booked are mainly as a result of poor decision making, but are confident that you have a working proven strategy, the problem could well be in the way you have perceived your losses. So a true trading edge relies on probability stretched out on a sufficiently large enough sample size. Experienced traders will know that a handful of trades mean nothing when that a much larger sample size is needed for an edge to truly play out in the market. Newer traders, often building their experience trade to trade, can be more emotionally driven by the result of a singular trade. Such traders are more prone to falling back on a negative mindset than more experienced traders who have seen their edge play cut in the market in the longer term and hence do not break a sweat at the sight of a few losses grouped together. Okay, so some last recommendations on recovering from losing streaks. Besides the above mentioned steps, you can also reflect on some other factors to help you avoid losing streaks in the future. As much as possible, maintaining a trading journal comes first and foremost. A lot of traders fail to maintain detailed trading journals that not only record their results, but analyzes each trade for key learning points. A trader must periodically revisit the trading journal to analyze the trading performance and draw important conclusions. Often, the steps highlighted regarding whether your strategy needs more refinement or if you need to work on your mindset because very conspicuous upon a quick glance of a well-maintained trading journal, in turn making it easier for traders to rebound from bad spells of trading. It is also worthwhile to be studying the overall market conditions and behavior too. Sometimes traders who work with trading strategies suited to particular market conditions will book frequent losses when they apply the strategy to a different market condition. In this case, instead of taking the route of altering your strategy, it is advisable to rather patiently wait for suitable market conditions to avoid future strings of losses. The same would also apply to well-known and documented periods of high volatility and reduced liquidity for your particular market. For most financial markets, for example, the month of December is often associated with more volatile moves as traders' volumes gets withdrawn ahead of the holiday season. It is not uncommon for traders to often book frequent losses in such periods. Conscious awareness of the best and worst times to trade your market will potentially help you avoid losing streaks in the future. Okay, everyone, well, I hope you've enjoyed this video, and to all of you traders out there that are having a bad week, a bad month, just, go back to your journal, see what you've been doing right, what you've been doing wrong, and I'm sure that you'll get back on track. So I hope you subscribe to the channel, like the video, and I'll see you all on the next one. Safe trading.